Okay, hello everyone. Um, it's getting late my time here today, but I wanted to go through follow through day and just kind of answer a question that's probably on a lot of new traders' mind. How fast should you be buying stocks, or should you be buying any stocks on follow through day? Um, the answer in general is you would want to. Because that would kind of change your bias. If you're biased, you're coming out of a downtrend, you're coming out of a bear market, and getting you to buy something will get you in motion to take advantage of potentially the bottom of the bear market. But frankly, not all follow through days are created equal, and that's really not something that's gets discussed often. I'm gonna try to show you um, very high level how there's sometimes there are follow through days while I'm already 20, 30, 40% invested even a day or two before the follow through day, because it depends on what you're seeing and what I have been seeing before the follow through day. Sometimes there are indications underneath the surface that um, that the current is shifting. Um, this follow through day has been difficult, and I'll kind of show why. But yeah, the answer is there's some follow through days that show you what you need to see, and there's stocks setting up, and then you're dive in 10, 15, 20%. And like I said, sometimes you're even invested before that, 20, 30%. I've done that many times before a follow through day. I was going through an old stack of notes and collections that I have, and I came across 2023 bottom, sorry, 2010 bottom. That was happened in September 2010 before good sized bull market started. I honestly cannot remember where I took the screenshot from. It was in my notes, in my OneNote. I'm assuming this looks like it's from one of IBD's books, Bill O'Neill's books. So it's probably took it from one of the books, and I just don't remember which one right now. But the purpose of this is I wanted to kind of go back to 2010 and show some of the stocks that were setting up and some that broke out on the day of the follow through day, and others that took days and weeks before they broke out and started to move. So it's really never late. Even if you don't buy anything on follow through day, that's fine. Don't getting discouraged. There's going to be plenty and plenty and plenty of setups to come. And I'm going to show you here in a few minutes why, even especially right now, we're going to have tons of setups to come if this market is really, really going to bottom here from this follow through day that happened on Friday. Tons will be coming, and I'll show you why. So I'm gonna go through these stocks that you see on here. There's only one, two, three, four, five of them that are still listed. CMG, which is Chipotle, HLF, Baidu, Lululemon, and then uh, Deckers. So we'll go through those. The follow-through days happen on 9/1, 2010. So let's switch to trading view and go through what we need to go through. I'm going to open up market trading view here. Again, disclaimer: do your own homework, your own due diligence. All right, let's jump into the cues and let's go back to 2003, 2010. I have the follow through day here marked for us to keep that in reference of where things are happening. This is the market here. It was pretty volatile. I still remember trading during this period. This is here for you who have traded back then. This is the flash crash of 2010. I remember this day like it is yesterday. There was a lot of fear. The Qs were down 13% in one day before recovering all the way back up. There was a lot of fear from this when it happened. I remember looking at my phone at work and can't believe um, that we are dropping in that manner. It's known as the flash crash. You probably, if you Google it, flash crash of 2010, you'll read more about it. But I was stepped out on all of my positions on this day. Obviously, there were stocks that were down 20, 30, 40% in one day. So the stock here formed the base, the bottom. There was a good sizable rally here, and then back down, and then here's your follow through day. Okay. So now what we're gonna do is we're gonna go through those stocks that broke out. CMG was one that broke out on the day of the follow through day. Right over here. You see this right over here is the breakout day. Pretty strong, healthy volume. But this gave you a lot of indications to get on your watch list, right? Here's your earning volume, that's character change. And then you've had tons, 5 days of RS new high before price. This stock should have definitely been on your watch list. And then it broke out on um, on follow through day. Um, if you listen to any if you're a part of IBD Investors Business Daily, um, a lot of uh, portfolio managers for Bill O'Neill at the time were buying Chipotle breaking out that day. There's mentioned multiple times, whether that's on IBD Live or some other webinars that they've had, but they often mention Chipotle breaking out and portfolio managers um, coming out and mentioning that they're buying Chipotle at that day. So this one broke out on that day, and it really broke out and potentially never gave you another entry. It just kind of took off from there. But let's take a look at the other ones. And here's Herbalife, and then you see this is the follow through day again. And then you guys remember that I told you there was a good sized rally here. You see it right here. So this is Herbalife, and you could have bought it here, but then there's earnings, so you're gonna need to be out. But this one again should have been on your list. Change of character, and then you have one, two, three, four, five high before price before the follow through day, right? So this stock should have been on your list. There's a nice pullback buy here. Potentially, this is one here. You potentially could have stepped out maybe if you're just tight. Here's another one here, and then this gets you out. But if you didn't really buy anything until the follow through day, this was a good setup for a follow through day after the follow through day. So you really didn't miss much. Here's your setup. Here's your breakout, pull back. You could have bought it here. You could have bought it, pull back buy on this day. And then if you bought it here or you bought it here, you could have also added to it right over here. Okay, right over here. Coming out, you can add to it. And then you got double your position into a stock that started to rally. Okay. So that's your second one. So you really only, if you didn't buy anything, you're missing CMG so far. So you've got HLF. And let's take a look at Baidu. And do stick to the end because I'm going to show you something um, pretty pretty cool. Here's Baidu. Here's where it broke out. And then again, you're looking at the profile here. It sets up okay here, downtrend confluence with horizontal. You could have bought it here, potentially, kicked you out, but attempted to break out, pulling back, and then building, a little base on base kind of thing. But this is really here you buy up. So if you did not buy it on the follow through day, you get another chance at it here, and then started building another base, and then came out. And then it gave you, I love these setups right here. This is a failed breakout, reset, tried to break out here, failed, and then came back out, and then started running. Okay. Um, but ultimately, if you missed it here, there's another setup right here. You can get on it and make some money. So not too late. But again, this stock should have been on your list. 52-week uh, high before price. Let's take a look at Lululemon. Go back to 2010. I love this setup on Lululemon. Lululemon is a great example of a lot of stocks right now because we have tons of stocks below their 200-day MA. Probably 30% are above the 200-day MA. That's it. I haven't looked at it recently, but in most recent days, this is so tons of stocks are below their 200-day MA. Here's where the follow-through day was. And then Lululemon was underperforming the market, obviously, right? But gives you a beautiful, beautiful, beautiful lotus entry right here. Built in the base, potentially inverse or continuation, head, shoulder, head, shoulder. But here's where it gives you a great entry, low risk entry, pull back and gives you a chance to do another pullback buy, double in your size, entry here, and then breaks out of this big base, breaks out of this big base, and then it pulls back to the 10-week MA the first time, and then potentially add on a pullback buy right here or right here. So now you're building your position. There's entry one, entry two, entry three, and then gives you another gift here, another failed breakout reset, and then you add number four. You got one, two, three, and four. Okay, and then you're into the stock. And then Decker, last one. Go back to 2010. Again, here's your follow through day. And I love this Decker setup. This is great example of pullback buys. And Decker gave you days after the follow through day, days, gave you pullback buy entry one, pullback buy entry number two, breakout, pullback buy entry number three, pullback buy entry number four, potentially. So you could have pyramid, 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 pyramid. And that's really how I pyramid that. So you've got Decker gave you four chances, one, two, three, four, to load up the boat. And then you have Lulu gave you similar chances to load up the boat. It's got you one, two, three, four. Similar setup. Lulu and Decker gave you really similar setup here. Okay, and then Baidu. So if you miss the follow through day on CMG, you had many other stocks, HLF, to buy. There's also another one that's not listed. This is the other one. Again, one entry here, one entry here. So you essentially are fully invested in the market, potentially on margin, few days after the follow through day. The last one that I wanted to show you that is not on the slide that we looked at is Apple. Apple is a really good, great example. And here's what Apple did. Here's the flash crash on Apple. Man, I still remember this day. Here's the flash crash on Apple. I'm going to show you guys how fast that drop was. Apple was down 22% on that day before recovering. It was a crazy day. And then here's your follow through day. Apple was pretty weak from a relative strength perspective, and then it breaks out here, pulls back, and then gives you a pullback buy here, gives you a breakout buy here. So you got the point. And then what does Apple does? Breaks out of the space, pulls back to the 50 MA for the first time. It gives you a pullback entry. So you got 1, 2, 3 chances to continue to increase exposure. What's the message? You missed follow through day. You missed CMG, right? Because that's the one that broke on the follow through day. So what? You've got 1, 2, 3, 4, 5 other stocks that I showed you that broke out days after follow through day and allowed you to get 100% invested and even on margin if you are aggressive. So don't be pressured. Um, watch for the setups and follow your system, follow what you're doing, and you will get invested. I do want to show something. But at the beginning, I said not all follow through days are created equal, and I, I say that because I have seen tons of follow through days, and when you're just looking at the chart like this, you're not really seeing underneath the surface of what's going on and how does this follow through day compare to previous follow through days. So let's take a look at the follow through day from 2010 and how does it compare under the surface to the day. So I'm going to take you to TradeStation. And here is the follow through day that we were just taking a look at in TradingView. What you notice, and this is the net 52-week net new high and low. Blue obviously positive, you have net highs. Red, you have net lows. If you see, and this is at the top line is a Nasdaq. The middle line is NYSE, and then this is all of US stocks. What do you see? While we're building this, NYSE is running in net new high, 52-week high, net new high, 52-week net highs. Nasdaq got really weak here. NYSE went red a little bit, but then on the follow through day and even before it, few days before, 1, 2, 3, 4, 4 days before the follow through day, we were net new highs. It's important. Okay. And even in this period, if you look at the stocks above their 200 MA, it was over 50%. It was about 53, 55% of stocks, or 51, or something like that. It was above 50. Right now, stocks above their 200 MA are, I think 30% or something like that. So huge difference from that perspective with this follow through day and for the 52-week high. Let's jump in and just fast forward all the way to today and take a look at how this is looking today from 52-week net new high and lows. So I'm gonna fast forward all the way today, and this is what you have today, and this is the follow through day. A huge difference, right? So that's what I meant by not all follow through days are created equal. Um, is this going to work? I don't know. No one knows. But underneath the surface, back in 2010, the market was healthier. But if this really works, if this really works, and this is the bottom, and we're starting a bull market or a tradable rally, um, that tells you there's a lot of stocks that are going to have to build up this right side of their bases and move out. So we're going to get tons of chances. This red tells you we haven't even started yet. If this is for real, we have not even started anything yet. Yes, ANET, VRT, there's some security stock, Palo Alto, they moved on Friday. So what? This red here tells you there are tons and tons of setups to come if this is for real. So stay disciplined, stay patient, and wait for your setups and for your entries and low risk entries. So hopefully that gives you a little bit of flavor on kind of what I've been looking at this weekend and stuff like that, and how I think about this and why I stay centered because I've studied this stuff. And it doesn't matter what happens 1 day and 2 days. Like you see, like I showed you, there's going to be setups days and days and days after follow through day. So um, stay focused, figure out if this is for real, how to get in, and how to pyramid. Like I showed you on the other stocks, Lululemon, Decker, Baidu, HLF, all gave you 2 3 options to pyramid and get your exposure and get your concentration and participate in the next run up. Anyway, hopefully that was good, productive to you guys, and um, please like and subscribe and spread the word. I'm trying to do stuff differently on this channel, and appreciate your help to get the word out. Thank you, and I'll talk to you later.